Hello and welcome traders to our YouTube channel at City Traders Imperium. In today's video, I'm going to be interviewing Chris Dovah, who recently passed the evaluation. He did the 17,500 evaluation and is now the portfolio manager trading the 70K account. This interview was absolutely filled with so many insights. He's been in the game for a long time, and so his wisdom in regards to his edge, his advice, and the tips that he gives, and also some of the challenges that he's faced in his career and how he overcame them, that's exactly what we're going to be talking about in this interview. So before we get into the interview, make sure that you like, you subscribe, and if there's anything that you want to comment, any feedback, make sure that you do that and support this channel. So without further ado, let's get straight into the interview. So first, I just want to say congratulations. You've passed the City Traders Imperium evaluation. Well done.
Thank you. It is a strong challenge, that's for sure. 3-to-1 ratio is a really cool, tough road. I really appreciate it.
Yeah, it's not easy. That's definitely a fact. It was one of the hardest things I ever had to do in my trading is to pass the evaluation. So I know exactly how tough it can be, but at the same time, it's very rewarding. It's the challenge itself teaches you so much, and it gives you that growth that you need for the next stage. Absolutely. Tell us about yourself, a little bit about your story and how you got into trading.
Sure, yeah. So I've been trading since 1999, so 22 years. And I've been in prop trading at a couple different firms over the years, but I got started back at the beginning of the .com, well, I guess the end of the .com bubble. And I started out in prop, got brought in on a trading desk, was taught everything, and then I kind of thought I knew everything. So for the next handful of years, I went and did exactly the opposite of what I was taught and how I learned risk management and trading. And then, as you do, you go down these rabbit holes of like, I'm a short seller, I short everything, or you go into you start picking different mindsets of things you are, but don't actually have a quantitative edge. And so a handful of years into it, more than I care to admit, I discovered that I could actually find repeatable patterns and setups, and I could mathematically discover averages and start using statistics to my advantage. That happened. I started doing that, and that's just manual backtesting, bar by bar of a chart of an asset every day, at least an hour a day. I've been doing that for 15 years now. And that was the thing that really flipped from taking me from thinking I needed to watch news all 24/7 and understand everything that was happening in the world in order to trade, to, hey, there's math behind this and I can just use that to my advantage and let everybody else do it. So I guess that's about where it's in. And then in January, so I have this trader community, and I've been convincing a lot of the traders to take their money and, use it as an investment in, really slow type safe investments and get money from prop firms, because they're basically giving it to you. And, you can get it. It just, you have to pass their rules, and their rules are, well, especially Citi, they're very strict. So you basically have to have a 3-to-1 return, right? So like you can only lose 4%, and you have to make 12.5% or something like that, I think, if I recall. So I basically, we've been working on getting a handful, our traders into Citi and funded and using all that. So I guess that's my story.
That is an awesome story. It's so good to have such experience in the CTI community. Your experience is similar to Daniel's, because you guys are essentially veterans compared to most traders in the community. So your experience comes with a lot of wisdom, which is great. And now you get to part that wisdom with your community. And so there's not many traders in the CTI community that actually have their own community. So has that been a big part of your development as a trader, having your own community of traders?
It is the funnest thing in the world, first of all, working with a group of people and helping them achieve their goals. Selfishly, Yes, it's helped me for sure. I've gained a lot from doing it. There's accountability. In essence, accountability to your teammates, right? You're also accountable to the prop firm. You're accountable. I'm accountable to my family. And I'm also accountable to these other traders. And the traders of the community are also, they don't have as much responsibility as I do, but they have, whatever, I shouldn't say it that way, but they have responsibility. They take responsibility and they share that responsibility to the other traders in the community, right? So when we're doing our daily review, okay, these are the trades I'm in. What trades are you in? We all go through everything and, we can see where everybody's at. It has definitely helped me quite a bit, holding myself accountable. And the traders who have also, who are either currently in the tryout or have passed the tryout with Citi, are also helping the other traders. So it's more of a journeyman apprentice type of community where it's not just Chris over here, I'm the leader and what I say goes. It's not like that. It's, when somebody new comes in, then some experienced trader in the group takes them under their wing and they mentor them. And then because that more experienced trader needs that leadership, they need that, I've learned it, now I need to teach it. And as soon as you teach it or as soon as you share it, now you have to understand it. And so you go from like, I understand it as a student to now I understand it as a mentor.
Yeah, that's a powerful transition right there. And I've experienced that myself because we have our own trader mastermind where we essentially focus on this accountability. And you hit the nail on the head right there. And accountability is so powerful. In regards to your trading journey, there must have been some setbacks. There must have been some challenges. What would you say would be like one of your biggest setbacks, and how did you, or challenges, and how did you actually overcome it as a trader?
Thousands of challenges, maybe millions. One of the biggest tool that I have to my advantage, and this is the same tool anybody else has, is practice. A lot of trading lore, for lack of a better word, says, okay, you paper trade to figure out the software, but it's not the same as trading real money. So don't waste your time by paper trading. You need to just get into it and get real live. Start small and grow. It's kind of that's actually counterproductive advice. If I said to you like, first of all, let's take a look at what we're doing. We're competing against the biggest institutions and machines in the world. We are trading currencies and different assets against the Goldman Sachs, the central banks, the sovereign wealth funds, the biggest, baddest, fastest machines in the world. You're playing pro. You're officially in the biggest league of them all. And don't practice. You don't need to practice. It's not the same. Just, go out there. That's like, so I was in the military. That's like saying, when you're at war, it's a lot different. You don't know what it's like until you're actually getting shot at. So don't go practice. Don't go shoot. Don't do anything. Wait till you start getting shot at and then deal with it. That's it's an extreme thing, but when you look at somebody, and I'm going to use sports here, Kobe Bryant, for example, RIP, he famously trained 4 hours a day. He would wake up at 3 a.m. so he could get 4 training sessions in a day. And his mindset was, well, if the best players out there are training once or twice a day, I want to double that. And the results were he was, arguably one of the best of all time. Michael Jordan has the same sort of work ethic, and LeBron, and all Ronaldo, and like the top players in any sport, they're fanatical about it. And for me, to bring it back, like every time I've made mistakes, it's because I just kind of went and thought that I was smarter than I was, and I didn't need to show up. And kind of the idea is like, that old washed up athlete who, should have retired a year or two ago, but they're 20 pounds heavier and they're a little slower. you get into that, and the best way to do it, and I do this every day, is I manually backtest and I practice, and just an hour a day. The thing about it is nobody does it. So 99% of every other trader out there is not doing that. And all it takes is a computer screen and free. You can get TradingView for free and just use, look at charts, or anywhere you can get, just practice that way. And eventually you can pull yourself out of any of those situations when you practice.
How would you describe the way you trade, or how would you describe your edge in the market?
The number one most important thing I need to do is identify what market regime we're in. And so I use a statistical model, which is basically the average daily change of the last 100 days. So, if for example, we're up 0.29% on the euro today, I want to average it out over the last 100 days. So 0.29 and like down 0.63 yesterday. So we're in a low volatility or we're in a high volatility. So if it's averaging above 1.5% or 1% over those 100 days, we're in high volatility. And if we're below, so we're at a 0.3% today, 0.3, that's a low volatility. So the average over the last 100 days, I take the standard deviation of that and then I square root it. So a little bit of math, but generally speaking, we're heading in three directions, up, down, or sideways. And we're either in high or low volatility. And so we're be like a bull volatile, bull quiet, neutral, bear quiet, and bear volatile. It's kind of like that spectrum, right? Mm-hmm. And so once I categorize the market regime, that's what's called a frame of reference. Like a place of reference. So, kind of Einstein theory of relativity is that, in comparison to the car driving by, you walking, with that frame of reference, you looking at that car and the car looks like it's flying. But when you're in the car, you feel like you're not going anywhere, right? And then when they pass you by walking, they're looking at you like, are you walking backwards, right? And so it's a frame of reference is all. It's like a calendar. If I said, hey, let's meet in let's meet in Malta, you'd be like, cool, I like Malta. The first most important question you're gonna ask me probably is like, what time of year, right? Or maybe the better term would be like, let's meet in Finland. That's even more important to know what time of year, right? Because that gives you a frame of reference. If it's January, you know that you're not gonna be, it's not swimming season. If it's July, then you don't need your big heavy winter coat and all those sort of things. So the market regime gives me a frame of reference. And from there, I can then take out characteristics of that regime. So if we're in like the bull quiet regime, it's a nice slight rising market. And you'll usually identify it with, really small days up and down, but the price going higher. And so there's a simple way to trade that type of market. It's pretty much look for weakness to fail and get long. Same thing on the downside. It's a nice slow drift, and you look for a bit of strength to say, okay, let's see how we respond to it. And when they respond, then you get short. Then when you get to the extremes, it gets a little bit more different to trade. So you would trade in the neutral, you would trade a certain way. In the quiet regimes, you would trade a certain way. And in the volatile regimes, where it's really wild, you trade a different way as well. So that's the idea behind my strategy. I don't have one single strategy. I have a strategy to categorize the market. And then I say, oh, okay, so we're trending now. Got it. I'm going to be in a long only trail stop and add to my positions on as it goes up at bases. If it breaks above that again, I'll keep adding as it goes up, and I trail stop all the way. If we're in a mean reversion, then trail stops are the opposite of what you want to do. You actually want to take profits because it's just going sideways, right? You're just bouncing around. So instead of thinking you caught like the very beginning of a massive down signal, in reality, you just caught the top of a range that's going to go here. And just when you're thinking, oh, I'm going to start adding to my position and trail stopping, then now you end up like giving it all back instead of just taking your 1.5 or 1.2 R winner. So different strategies for different market regimes. And luckily for me, we had a nice trending regime for the last couple months.
Nice. Yeah, I've noticed that. And do you have an indicator for this? Because it sounds very mathematical. Or do you use is it purely discretional?
So the indicator to categorize the market regime, there's a couple of ways that can be done. One, you can just use price action. You can look at the charts and see for yourself it's rising. And then just how many days is it really big candles? Okay, it's volatile or it's quiet. But that comes from experience. So I have a tool called the SQN, System Quality Number, and Dr. Van Tharp, if you're familiar with his work, it's an indicator that he created, which again, it's just statistical. There's also another way to do it is you can use ATR. Like a declining ATR and a rising trend is the same as a bull quiet regime. Characteristics can be the same. And also you can use like Bollinger Bands. The thing about it is you want to know the math behind any indicator you decide to use. Instead of just slapping an indicator on your chart and saying, oh, wow, this tells me exactly what I want to know. The indicator is a derivative of price. It's not actually price. Price is the truth. And indicators, all they're doing is they're trying to give you insight. They're trying to, clarify it for you. So anytime I look at, and of course I've got a lot of experience, so it's, doing the manual backtesting makes it a lot easier because you start seeing patterns over and over and, just an hour a day. So,
do you use fundamentals at all?
No fundamentals. So sometimes there's an idea that I may have, like the pound, for example, is probably on a, historically since 1971, it's been in the 150 to 170 range against the dollar. So we're, down in the 140s, we were in the 120s. We're heading, currencies mean revert over the long term against each other, that is. And so it looks like we're looking to mean revert back up into that level on the pound. So I kind of have a bullish idea, though I was short 2 days ago. So I don't really have a lot to, my setups are, depending on the regime, technical or just price action based. If it's a certain price, if it's a certain market regime, price action is the easiest way to get in. You just look for the behavior. If we're in a neutral regime, then I use a strategy called the FVBO strategy I made up with Bollinger Bands and Keltner channels. But for the most part, yeah, it's on. If you look at my screens right here, you're just going to see price. Just price and lines.
Awesome. Yeah, I like how you have your specific market regimes and you know exactly what to do. So it's similar to a fighter pilot, right? They need to understand the weather, right? They need to understand the machine that they're flying in. They need to understand also themselves. And so when you understand the market regime you're in, you know what tools, what weapons to use, what tactics to use. And obviously with your experience, especially in technical analysis and price action, and looking at multiple markets, you get an idea and a feel for being in sync with the market. So let's talk through it. Let's talk about when you started it. So you started it around, and you were taking like small wins, small losses, but there was a little bit of a drawdown here. Do you remember this your first 25 trades? What was your thought process going on around there?
Well, that was, we were, in hindsight, we had moved into a trending environment, but we were just leaving a mean reverting environment. And so now it's easy to see. You pull up, GBP, pound yen was my biggest winner. You take a look at that in the last 3 months, you can see where it really started to take off. But it wasn't, I was trading it in a mean reverting style after it really started to, head in my direction. I realized it. And so small stop, small stop, small stop, small stop. There we go. Now we know what's going on. Okay, looking pretty good. Let's see if this is actually the case. Raise your stop up, follow it along, and eventually it did. The euro pairs generally and the dollar crosses both kind of really put in some good work. And so when that shift from market regime to the other type of market regime, that's where, as you can see, that's where the biggest risk is, because you don't really know that you're in the new regime until you realize, oh, I've gotten stopped out a couple of times here. So that's indicative of, is my win rate, of let's, 60, 70, whatever, am I at like a 20% win rate or a 30% win rate right now? Okay, well, that's indicative of not the right regime. I should be on a mean reverting, I'm above 70%. So that's when you kind of start flipping it. And then all of a sudden it became obvious that we were moving. And so it was very easy after that.
Yeah, I can see that. Well, this is probably one of the most impressive equity performances that I've seen. The stats here, what really impresses me was your largest win against your smallest loss, but also the average win against the average loss. This is such an important metric to look at. So you can see here that you really take into account the risk reward of your trades. And what you described earlier about trailing your stop, you can see that on your largest win. Could you talk me through that particular trade? Where was that one where you were trailing your stop? Was that the pound yen that you were describing? Oh man, that must have been a beautiful trade. Was this one right here? Yeah,
pretty much. It so there was multiple entries in there. I added to it. Can't remember how many times. Maybe 5 to 7 times. I think I added to that position. And the first position is the $1,300 position. That was like getting in right when it broke.
The runner. Gotta love
right
those.
When it headed out. Yeah.
Awesome. This was you basically took the CTI evaluation and you just knocked it out the park. Look at this performance. In just 3 months, you completely smashed it. Amazing. When you look at this performance, is this something that's common to you, or would you say that you actually smashed it? This was kind of above your average.
Well, I will say we had a nice trend, and we haven't had that in the as good. 2020 was a more challenging year for currencies, but if we look back in 2019 and behind, I would say it's fairly similar. My models, so by doing all the back testing, I've got probably 1 million trades in spreadsheets together, and I can see my models fairly easily, so I know where I am. And so with Citi, for me to hit 12.5%, it takes about 3 to 4 months to hit that. That's average, and you kind of saw that where the first month wasn't as good. Second month, it did average, and the third month was above average. So it averages out to about 3 to 4 months to hit my 12.5%. So it's a roundabout way to come to that answer, I think. Your
drawdown was at 3%.
Got there. I got close.
Yeah, you got close. And again, the performance against the fact that you got to 3% drawdown, but you ended up with 19.4%. That goes to show a lot of discipline when it comes to risk management. So well done. If you could put some wisdom.
It's mathematical wisdom here. You need to know, first of all, understand what the incentives are for getting funded. So think of it from Citi's perspective, or any prop firm's perspective, any investor's perspective. If what do they want? They don't want somebody who's going to come in here and just smash it in like a week, doing everything they can to, well, I'm going to be up 25% in a week. You're going to fund me. I'm going to be your best trader. From the prop firm perspective, that's not what they're after. They're looking for consistency. Somebody who's going to walk in and just steadily put in the numbers and do it over time. And you can see in the economic or their scaling program of Citi and all of them, pretty much that, there's a price target. You have to hit 12.5%. And here's your risk. You can only risk 4%, or you can only have a drawdown of 4%, or it's over. So, okay, it's going to be a long-term game, and that it's going to pay off at the end, right? So one thing I did is I just broke down, I got my model, and I know, okay, I can usually make anywhere from 2 to 5% on average a month. I can go higher or I can go lower depending on how much risk I put on, but I can do that fairly consistently. Okay, so if I was to do 2.5 or 3% a month, it would take 3 to 4 months for me to hit my profit target. Okay, that's mine, because I know what my average win size is, and I know what my average losing trade is, and I know what my win rate is. So I can mathematically lay that out. Okay, how long will it take? What do I have to do? I have to make 1750, I think, or something like that on 12.5% on the first thing. That takes me 3 to 4 months. Okay, and as I look at it, it took me 3 months. Okay, I'm following my model. Well, the other thing is you have to understand, by doing this with Citi, you're not going to be making, let's say, $5,000 a month. It's going to take probably 6 to 9 months before you break that $5,000 a month mark. So it's a long game. It's not a short-term game. If you do it right and you follow that model, you'll make about $45,000 your first year of trading. And it'll happen, half of it'll happen in the last 2 months. So you'll make about $20-something thousand in the last 2 months, and $600 in 3 months. Just slowly getting to it. So it's a long-term game, and you have to be prepared to play out at the end, because at the end of it, 2 years from now, you're running a $2 million account making $45,000, $50,000 a month. So it's very long-term, right? Pays off nothing in the beginning. So you weed out all the people who are undisciplined, who don't have a model. They don't understand what they need to put in to make it work. They're just kind of going after it. Which is a big problem that a lot of people have when they do these tryouts. They don't actually take them seriously and realize the people that win and stay long-term in the game aren't like, they're not like genius traders. They're just consistent, and they know what the model is. That's my advice.
Yeah, you've definitely figured it out, Chris. And that advice is absolutely stellar advice. And those who are listening, make sure you're taking notes. Make sure you actually repeat this video. I'm definitely going to go back to it a few times. You've been such a fantastic guest, and it's been such a pleasure, Chris, to be able to have this conversation, learn about your strategy, learn about your experience, and the wisdom that you're sharing. I can definitely tell that you are a coach and a mentor. So it's great to, from a coach to a coach, it's definitely great to have that conversation. And if some of our community wanted to come and find you, where would they be able to find you? Do you want to share some of your information here right now?
Sure. First of all, on Twitter, at Chris D Macro. Chris D is in Delta, CHRASD Macro. And pollinatetrading.com is where we're at. Got a community, pretty great community of traders, live stream every morning. And we have a 24/7 Slack that we work together on. We trade crypto, we trade equities, we trade options, we trade futures, and definitely trade Forex.
Just so many nuggets that Chris shared. His experience is invaluable. So I'm going to leave his contact details in the description, so if you want to reach out to him. Otherwise, thank you so much for watching. If you have any positive comments and feedback, leave it in the comments section. I'll make sure I respond to all of those comments. And make sure that you like and subscribe and support this channel so that we can continue to interview more portfolio managers. Again, guys, thank you so much for being here. Thank you for watching. And until next time, we'll see you soon. Take care.